Hi everyone, welcome back to Stocks and Real Estate. Today we're diving deep into a topic that divides a lot of investors: long-term investing versus day trading. You've seen the flashy Instagram reels of people making thousands in a day, and maybe you've also heard about people who just buy and hold and end up millionaires. So, which is better? Well, by the end of this video, you'll know exactly why long-term investing has a statistical, psychological, and financial edge. And I'll show you real-world examples to prove it. Let's get into it. First, let's define both. Day trading involves buying and selling stocks or other assets within the same trading day, sometimes within minutes. It relies on timing, price movements, and technical analysis. Long-term investing is buying assets, typically stocks, ETFs, or index funds, and holding them for years or even decades. The goals are completely different. Day trading is about short-term profit from volatility. Long-term investing is about compound growth and letting time do the work. But here's the catch. While day trading sounds exciting, the data consistently favors long-term strategies. Let's talk numbers. A famous study by the University of California looked at over 60,000 traders. They found that only 1% of day traders were able to consistently outperform the market after fees and taxes. On the flip side, if you had invested $10,000 in the S&P 500 in 1993 and just left it alone, no timing, no trading, it would be worth about $98,000 today as of early 2025. That's a 9.8x return, not counting dividends reinvested. Another stat, missing the best 10 days in the market from 2003 to 2023 would have cut your returns by more than 50%. Day traders often miss those days because they're in and out constantly. Let's use two hypothetical people. Yes, Teddy the day trader starts with $20,000. He's active, trading options, using margin, and chasing volatility. After 3 years with ups and downs, he's left with $18,000 and a lot of stress. Mark the long-term investor also starts with $20,000. He buys a low-cost S&P 500 index fund and forgets about it. After 3 years with an 8% annual return, he has around $25,200. Now let's project them over 20 years. Teddy continues to trade. Let's be generous and say he averages 2% profit per year after fees and taxes. After 20 years, around $29,700. How about Mark with an 8% return compounded annually? That's over $93,200, more than 3 times as much. Now imagine if Mark was consistently investing an additional $500 a month. His portfolio after 20 years could top $300,000 to $400,000 depending on market conditions. One of the greatest advantages of long-term investing is compound interest. The longer you stay invested, the more your money works for you. On the other hand, day traders often experience high stress, emotional exhaustion, and frequent losses due to market unpredictability. Ask yourself, do you want long-term wealth accumulation or short-term adrenaline rushes with high risk? Important tips. Please take a screenshot or write these down. First, I have always stressed to investors, if you are willing to sell off your long-term, make sure it is for a larger asset such as a property. Second, if you still want to day trade, make sure you do this in a separate account away from the long-term portfolio. Third, your smaller day trading account deposit should be no larger than 10% of the long-term account. Fourth, don't ever sell anything in the long-term portfolio to use those funds for day trading. 9 times out of 10, you will most likely regret it. Okay, let's talk psychology. Day trading can be mentally and emotionally exhausting. You're glued to screens, making split-second decisions, constantly stressed about every tick and price. It's gambling in a suit. Long-term investing is calmer. You don't need to watch the market every day. You can live your life, spend time with family, build your career, travel, while your money grows in the background. Also, cognitive bias plays a huge role. Traders fall into traps like confirmation bias, loss aversion, and FOMO. Long-term investors, by contrast, focus on fundamentals and trends, not emotional noise. Fees and taxes are silent killers. Day traders face short-term capital gains tax, which can be as high as 37% in the US, depending on your income. They also rack up trading fees, slippage, margin interest, and sometimes platform costs. Long-term investors, on the other hand, benefit from long-term capital gains tax, capped at 15% or 20% for most people, and zero taxes if held in a Roth IRA. Plus, when you trade less, you pay less in commissions and less in spread costs. A lot of day traders think they can time the market, but even professionals fail at this. JP Morgan once reported that over 80% of actively managed funds underperform the S&P 500 over 10 years. If professional hedge funds can't beat the market, what are the odds that the average retail trader can? Warren Buffett once bet that a simple S&P 500 index fund would beat a group of hedge funds over a 10-year period. He won by a lot. Warren Buffett advocates for long-term investing because history has shown that the market generally trends upward over time. Here's the truth nobody likes to say. Building wealth is boring. It's about being consistent, patient, and disciplined. It's not about catching the next meme stock or crypto pump. It's about staying the course when things get rough. Think of investors like Charlie Munger or Jack Bogle. They didn't get rich from trading. They got rich from owning great companies for a long time. So, is day trading a total scam? Not necessarily. Some people do succeed, but it's rare, stressful, and risky. Long-term investing, on the other hand, gives you time, leverage, and compounding. The real keys to wealth. If you're looking to grow your money in a way that's proven, sustainable, and low stress, long-term investing is the way to go. If you found value in this, hit that like button, subscribe for more investing content, and let me know in the comments. Are you team long-term or team day trade? Until next time, invest smart and stay patient.